Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for March 12th, 2024. How about we take a look and see what happened around the market last night? First off, we had Asian markets mostly higher. Boy, and I'll tell you what, Hong Kong surged big time. That's the tech-heavy sector over there. Really surged 3% to the upside last night. While Shanghai was a little bit lower, Nikkei continues to sell off just a little bit after its record highs. If we take a look at Europe this morning, Europe is green across the board, showing some confidence heading into the US CPI number. Trying to move up here, or maybe just trying to put on a brave face, we'll see. And here in the U.S. markets, we're relatively flat. Our Dow futures at the moment, early this morning, are just slightly lower, but they have been creeping up, and the normal pump in the morning. And then we've got SPY and NASDAQ up sharply, and I'm guessing it has something to do with the Oracle earnings last night that surged, and then, of course, what happened in Hong Kong last night. If we take a look at our oil prices this morning, oil prices are moving back up. Boy, this has been a very volatile situation here on oil. There is quite a few stories out there that the Chinese economy is continuing to slow, that there is a demand destruction going on. There was an interesting story out that about that yesterday, and that the housing situation over there is not getting better. And so we're seeing this bit of a demand destruction, and as a matter of fact, there was another story came out yesterday. If you remember, I mentioned steel might be a place to go to as the dollar weakens. I'm going to back off that statement here today, just simply because the story out is that iron ore is starting to pile up in China and places around the world, just simply because demand for iron ore seems to be declining pretty sharply. So be a little bit careful there. But oil this morning moving higher. We've got oil up 52 cents. Brent is up 63 cents. And we've got natural gas up not quite 2 cents here on the day. If we look at our bond prices, well, kind of interesting where we've got our 2-year bonds moving up. We're at 4.53% this morning on those 2-year bonds. And yet our 10-year bonds continue to stay weak at 4.09% as we head into the CPI number this morning. And the 30-year bonds are essentially unchanged from yesterday at 4.25%. Shorter term bonds continue to hold well above 5%, above 5.25% on our shorter term bonds. If we take a look at some of the news out there right now, we've got Bloomberg Economics coming out saying that the CPI number will not inspire Fed rate cuts. Now, I don't know if that's true. Everybody's got speculation on that, but that's something to keep in mind. And then we've also got Jamie Dimon out this morning warning that a U.S. recession is not off the table yet. So kind of take that into account as we head into this number today. There's a lot of anticipation, either bullish, bearish on this. We'll have to watch carefully as we roll into that number this morning. So with all that being said, what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Tuesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts and see if we can gain a little bit of information about how we might want to approach the market for today, keeping in mind that we have a data point today that could change everything. And let's try to shake off a little bit of bias in here and see what the chart is telling us overall. First off, if we take a look at the diamonds, there is a little bit of a concern, a worry here on the diamonds. And that's just simply because we have had these lower highs coming into play here on the diamonds. But yesterday we pushed down here pretty strongly. There probably was some worry in here earlier on in the day, and I'll show you that there was, but we ended up holding support here in the chart, pushing back up with a pretty strong move back to the upside. And this morning, well, we're trying to move up a little bit and a little bit lower, a little bit of uncertainty heading into this number today. So if the bulls find inspiration in that CPI number, where are we going to go? Well, it looks like the next place we would go is kind of pushing up through here, maybe grabbing a little bit of that resistance right there and see if we can push right through that area and break this downtrend that we've got going on currently in our diamonds. We'll want to watch that carefully. And there's every reason to believe that the number today could inspire those bulls. If you remember the last time we had a CPI number, it was not favorable for the Fed cutting rates, and yet the market chose to continue to rally. So we'll see if that kind of thing happens today, and we'll see if we can push on up through that area, and then we'll start looking in breaking out of these areas and then potentially all-time highs. If we can get a close up here, all-time highs could be coming into play as early as this morning. If we take a look, if the bears were to find inspiration, and that's one of the things about that big pop yesterday that really does warrant some concern, is that if the bears are inspired today, well, we have given ourselves a pretty big opportunity to drop hard if that data is bad today. Dropping all the way back down into here would not be out of the question if we whipsaw back down through there. And where it really gets serious is if we were to break that support in the chart. We're starting to look at areas down here and even substantially lower to find a major support in the chart on the diamonds. So we will want to watch that pretty closely here as the day progresses. If we take a look at our SPY, very different situation here in the SPY, just no worries whatsoever. We're continuing to hold this trend. Bulls are definitely in control here on the SPY. So stay with the upside trend, but continue to raise those stops because we do have those potentials for some pretty big downside moves if the bears are inspired. However, if the bulls come in, find that inspiration in the data today, yeah, not much work here even to break through here to have an all-time high close, a little bit higher, and we have that potential of new record highs in the SPY. So watch that carefully. Every reason to believe that's possible the way we're set up here today. It's also not a big stretch to see that possibility if the bears were inspired that we could really start moving sharply lower. Yesterday's test of this trend was a good hold of support, but if we were to reverse on a bad data point here this morning, popping down through there would not be a big surprise. And then we start looking at areas down in here and even this bigger area of support, which would be a substantial point move in the market. And you really want to pay attention to the fact that we've got a big open gap right here. If we were to break this area of support, that downside move could be substantial, coming all the way down into filling that gap. So once again, I want to warn on the possibility if the bears engage, if they find that reason for attack, there could be some big point moves to the downside. So just be careful and make sure, stay with the trend, but make sure you've got a plan to deal with that downside move if it does happen. If we take a look at our QQQ remains very strong, and we're trying to pop up here a little bit more this morning. Pushing up, you can see we found that good support in here again, trying to hold on. We've got a bit more work here to do though to really recover here in the QQQ. Remember, pushing all the way back up here, that's a pretty big move, and it's possible on this data point today that we could stretch that all the way back up through that area and a new high in the chart So watch that carefully. That's our target up there. If those bulls can really start pushing and really stretch, that pushes us back up here to those all-time highs here in the QQQ. Now, if the bears were to find inspiration, although we bounced here yesterday, it wasn't all that impressive overall. And if we were to see those bears engage, you could see it really wouldn't be all that difficult to see that possibility that we could move down below this price support and then fall into this gap. And that is a pretty substantial point gap that we see in the market. So just be ready just in case those bears find inspiration today. And I'm certainly not suggesting that they will, just that possibility does exist. Notice that we've given up this trend here, and that double top is probably raising a little bit of worry and concern here in the big tech sector. If we take a look at our IWM, well, IWM had a pretty good day yesterday, just a spinning top doji, not really going much of anywhere. Overall, still holding up in this trend. If we can find bullish data here today, every reason to believe that we could bounce off of this area of price support, push on back up here, retest this big resistance, and that big resistance runs back here, and it is a substantial resistance. But one of the things that could be helping here in IWM is the rotation from big tech and rotating into other stocks. We talked about that yesterday, and that certainly could continue, particularly if we see big tech get a little bit of bearish attack after today's data. And I'm not saying that's going to happen, but we will want to watch carefully for that. So every reason to believe we could attack this area up here. And if we do attack that and push on through, well, that's going to be an interesting change here in the market, because pushing through that area that would prove to hold as support really changes things in IWM. However, if those bears find a reason to attack today, and you can see this price support across here, really wouldn't be that hard to see if those bears have reason to attack, that we fail that area. And if we do fail that area, then I think the high likelihood, there we go, is that we would push back and maybe test this area of price support. There is a little bit of support right there somewhere in the middle that we might catch initially, but coming down into here does seem like a possibility. Now, if we take a look at our VIX, although we popped and pulled back a little bit here in our VIX continues to show us that little bit of fear. We almost held up there above 16 handles in the VIX. There's that downtrend break. There's that little upside trend that's going on in the VIX. And you can see we held some price support in here for that higher low in the VIX. So today, it's going to be really, really important how the market reacts to that data point. Again, it's not so much about what the data says, it's how the market reacts to it that's going to be important. If we were to get a bullish response in that data today, then what we want to see is this pulling back to test this trend or even this support, and possibly even break it if we get a strong enough move to the upside in the market. However, if the bears were to find inspiration today, well, we can see if we pull this back and drop a line in across these tops right in here and start breaking through this major resistance here in the chart, we would really start to see fear creep up here in the market. Remember, every time that VIX goes up, if you're an option trader, the extrinsic value of the options will go up. So options will get more expensive if we start to see that fear cropping up here in the market. I'm not saying that's going to happen, just watch for that possibility. Let's take a look at our T2122. This is the 4-week new high, new low ratio. And you can see yesterday we just had that marginal pullback here in the market. It was, as I suspected, kind of a hurry up and wait trade day yesterday. Although we did see some really good things in some of the consumer defensive stocks, some of the consumer staple stocks. Oil did really good yesterday, so there was some good rotation. Stocks starting to hold up and looking pretty good, but we can see we had just a few more stocks declining yesterday than moving higher. What's interesting is if we look at T2108, well, T2108 stretched on higher here, so we saw the percentage of stocks above the 40-day push up just a little bit higher, and for the first time in a long time, we kind of snuck out over that resistance there in the chart as this continues to stretch on higher. So watch that closely here. Are we is this good, or are we getting a little bit over extended here once again in our T21 and 08 as we continue to move up on very low market breadth? We'll see here as we progress through the day. Watch that closely. Notice we get that little hockey stick in the air here. That sometimes means that we get that penalty and have to go to the penalty box. So watch that carefully. But you got to give that to the bulls. Our T2107 did the same thing. Nice little stretch up here yesterday, breaking this resistance in the chart, pushing on upward, testing this little level of resistance in the chart, looking pretty good. Percentage of stocks above the 200. You got to give that to the bulls as well. We can see that our next levels up here will be pushing us into kind of a frothy zone in T2107, but that might be possible with a rotation here in the market. Now, just remember, a rotation would mean we would probably have to see tech sector and S&P 500 and maybe even the Dow turning lower for that rotation to start pulling money out of that tech sector and starting to push it into other areas of the market. So just be kind of watchful for that potential of that rotation. And then if we look at our T2101, our T2101, although it did turn up ever so slightly yesterday, it's just largely flat. Nothing's happening here. Our breadth continues to decline as we continue to stretch the market higher and higher and higher. And I really get the feeling that institutions are driving this pretty heavily to keep retail buyers buying. If they can keep them buying, it gives them an opportunity to sell, to unload. And I look for that possibility. Not that I'm trying to predict it, but I just feel like I've seen this before. Like all of a sudden, they will just snap and go to the other side all at once. So, and that means those big point moves to the downside. I'm not saying that's going to happen. I just see when our breadth is so weak as the market continues to go up, there's a problem here that really could create some damage in folks' accounts if they continue to chase to the long side. Let's take a look at our economic calendar for today, and our first off, let's deal with earnings, because earnings are probably going to be can't do that. Let's do our economic calendar. Sorry for the flip-flop there, but this is going to be the data that makes the difference for the day. And you can look at those charts and you can try to decide which way the market's going to go, but it really is going to come down to the reaction here in the CPI. We also have an NFIB small business optimism report we saw yesterday. Consumers are in that data report are expecting inflation to stay high, and we'll want to watch this here this morning. It looks like this came in at an 89.4, a little bit less than expected. Small business optimism is starting to decline ever so slightly. Last time it declined a little bit as well, so keep an eye on that. And then, of course, we've got a CPI number today, and this is going to be really critical. Consensus is suggesting that this comes in at a 0.4. Last time was a 0.3. We'll probably ignore that depending on how this number comes in. Whether we're last time we were 3.9, see if we're going to be 3.7 as consensus is expecting. So watch these numbers pretty carefully this morning. I would expect some big possible moves either up or down depending on how that number is received by the market. Watch that pretty closely. If we take a look at what's left on the day after we get through that, well, We've got some bond announcements, a 10-year bond auction that could be interesting depending on how that CPI number comes out. And then a Treasury statement here at the end of the day where we continue to show the massive deficit that we've got going here. Consensus is looking for $298 billion in a negative on our Treasury statement. Keeping in mind as we move toward Wednesday, not much happening here. Pretty low data on that, but then we're going to be thinking about the PPI and jobless claims coming in here to Thursday. So Wednesday could be another one of those hurry up and wait days. We'll have to see. Let's take a look at that earnings calendar here for today. Now we're running out of the major notables here in the market, but I did create a list of notables, somewhat notables, not likely to really move the market a lot. But this morning we're going to hear from Archer Daniels. Looks like Archer Daniels trying to come up out of this bottom a little bit this morning. We're going to hear from IHS Holdings here today. Watch that. We're going to hear from International Game Technology, IGT. Looks like they're getting a little bit of a bearish move here in the pre-market. We've got Kohl's that will be reporting today. Looks like they're trying to just edge to the top upside here this morning. We've got SWIM that will be reporting an ONON today. Ooh, that's going to leave a mark. Big strong move here apparently on the earnings, disappointing at a price resistance. So keep an eye on that. This afternoon, CYRX again, yeah, for notability, but trying to hold in there on a bullish pattern, and SKIN also as somewhat notable here today, and yeah, marginally notable here for this afternoon. Let's take a look at some stocks that could be setting up for today, however. But before we do that, if you guys could do me this quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and then also click that bell icon when it pops up, so you'll be notified every time I post a video. And if you feel like these videos are worthy, if they're helpful in your preparation for the day, if you could do me that favor, click that thumbs up button as well and leave a brief comment. Remember, the way YouTube works nowadays, it really is the reaction to the video. It's how you engage with the video that makes a difference. So the more reaction, the better it is in the algorithm showing these videos to more folks. So if you could do that for me, I would truly appreciate it. And sharing these videos out on your social media feed also helps us reach more people. So thank you so much to everyone for your kind support of the effort. I really do appreciate it. It does take quite a bit of time to prepare and put all this together every morning, and the fact that you are doing that helps me a ton. Let's take a look at a few stocks that could be setting up. And remember, guys, these are not recommendations to buy or sell any security. You need to do your own due diligence. Be very careful here in the market. Particularly with the data that we have coming today, because of the potential big point swings that are possible. So with that being said, remember, follow your own risk tolerance. Never ever follow anyone else's trade ideas blindly, because you can create some real problems in your account by doing that. Follow your rules. Let's take a look at a few stocks that are, well, pretty interesting here overall. As you guys know, I said I have a position here in BMY. Picked up BMY in here off of this alert right in here. Oh my goodness, that thing has taken off like a rocket to the upside, way more than I would have expected. And please keep in mind that I'm also hedged on this. I have a short strike up here against this trade as well. And as we continue to stretch on up here, I am expecting this to pull back at any point in time. And it needs to. We're kind of getting a little bit too stretched out. But one of the things that we're seeing is quite a rotation into some of the drug makers. And we'll talk about that here in just a second. But watch here in BMY, if we were to rest or pull back and come back into this trend, then we have that next opportunity to find that entry to push on through to the upside. But if we look at that sector, man, we have hated Pfizer for a long time. I mean, we have hated it. It has been driven down, driven down, driven down. Look what happened yesterday in Pfizer. A big popping move here in Pfizer, breaking up through the 50-day moving average. Now, I wouldn't want to chase it here. That's too big a move to chase. But any rest or pullback, any consolidating move that holds onto that support, boy, I would be watching that closely for that next opportunity, maybe to enter into that trade. I don't want to chase these straight up moves. I want to wait. I buy stocks at or near price support. I do not buy stocks as they stretch up or where they're at or near a price resistance or high likelihood of a pullback. So watch that carefully here in Pfizer, but I think that might be one coming around. If we look at Moderna, we've seen Moderna making that big stretch to the upside. Now here again, we're pushing into a resistance. You don't want to be buying a stock at price resistance. We want to be looking at it somewhere around a price support and trend. So a little rest or pullback here in Moderna would certainly help set up that opportunity here in the chart. And I think this needs a bit of a rest, hold in here on the trend, and then look for that next opportunity to the upside. And it is possible that this could come back to that longer trend. And even if it pops out of here, still has to come back and rest before I'm interested in jumping into that trade, just in case it whipsaws. And I've made that mistake. I'm telling you guys, one of the biggest mistakes I made year over year, struggled with that, and that is chasing stocks and buying them at or near price resistance rather than at or near price support. A mistake that I no longer make because I learned a lot of hard lessons over the years. Let's take a look at some other places. Johnson & Johnson, J&J, also getting a nice little bounce here yesterday, and this is a very, very bullish pattern starting to show here. Possible higher low coming in here, and if you'll notice in this chart, could be a possible inverted head and shoulders pattern there in J&J. Look for that opportunity that might pop on through here. I'd keep a close eye on that. Let's take a look at other areas of the market. My goodness. Even though we had oil moving lower and we're worried about this demand destructions, well, we really saw some pretty good moves happening in oil exploration stocks, in oil stocks themselves, pushing higher as the dollar weakened. So you can see here in XOP breaking through some resistance here in the chart, moving up. Here in TC2000, if you have it, and by the way, you can go get some tutorial videos here on TC2000 that I have on the YouTube channel, but you can see, click one icon here, and now I can find what makes up this ETF, and I can look through here and see what's moving. Take a look at a stock like BRY. That is a beautiful little pattern breaking through resistance. Needs a little rest or pullback, but moving up. We've got Murphy Oil, really strong, and so you can just run through a list here and come up with all kinds of stocks, putting in bottoming patterns, putting in setups here that may be interesting. As you guys know, I mentioned Valero yesterday. If Valero can break this multi-year high here, that's something I would be looking at. I don't want to buy it right here, but if it can pop through that multi-year high, well, look out. There could be some interesting upside, and I'm even seeing things in like Halliburton showing those signs of coming up out of those bottoms, higher lows coming in. Any rest, consolidation, or pullback in here that holds onto that trend would set up that next opportunity in Halliburton. How about VVVV? Oh my goodness. Valvoline, what a pretty little pattern up here. Broke through this resistance up in here, and now we're resting in this nice tight consolidation. I should move that down just a little bit and give it a little bit more space. But this is a nice little resting pattern in Valvoline. I would be placing a price alert right across in here to see if we stretch on higher here in Valvoline. And right now, every reason to believe that is the case as the dollar continues to weaken, with bond yields still showing relatively weak here in the market. Having said that, we also need to be taking a look at some of the bond funds out there. Take a look at TLT, the 20-year bond. If we look right in here, this is a beautiful little break of the downtrend, and we're getting this nice little tight consolidating move here out toward the trend. Once again, I wouldn't want to chase, I wouldn't want to speculate here just in case this were to slip and fall. What we want to do is place a price alert in here above this price action, and we want to see if those bulls are going to step up and step through. If we see a CPI number that is better than expected or pushes on those bulls to say that we've got inflation coming down sharply, and we'll look for those bond yields to collapse, and I would watch TLT move to the upside. So watch that carefully. This could trigger as early as today if we get really good numbers in the CPI. So watch that carefully on TLT. You could also go to BND, the bond fund in here, Vanguard. Pretty darn nice pattern here setting up in that chart. Nice little resting pattern. Possible higher low could be coming in here. Wait for that potential pop for that to break on through. And remember, if we start to see inflation really collapse, that's going to inspire the banks to buy up bonds in a much heavier way than they have for some time now. So watch that carefully. So if you really are a believer that inflation is gone and that we're going to, everything's going to be copacetic in the market, keep an eye on these funds. You could even look at junk bonds. JNK junk bonds may have that opportunity to reverse and break this big resistance to the upside if we get those numbers that support that move in the market. Let's take a look at a couple other things. What was interesting yesterday is we also saw some strength in some of the retail out there. Take a look at JWN coming up off the bottom. Today we're going to hear from Kohl's on a report, and you can see kind of spinning around in here. But if we look at like Walmart, oof, nice move there yesterday. I mentioned this in the morning prep yesterday. Nice little morning star pattern forming. May still have to rest out here to trend, so I wouldn't chase that move, but watch that carefully. Walmart looking good. We're starting to see some of these old consumer defensive stocks coming back up. And even though Coke and Pepsi were looking pretty poor yesterday, big surge up here in Coke. And again, some of those consumer defensive stocks had a good day yesterday coming up. They may not be ready for prime time just yet, but I would keep a close eye on those for that potential rotation to the upside. There is some signs in here where we've got like Clorox holding up here nicely, looking good. Colgate-Palmolive showing very good strength here in the market, and we do have some of those stocks rotating up out of bottoming patterns as well, so I would keep a close eye on those. So with that, everyone, there's quite a few things for you to look at today. Remember, everything is going to key off what that CPI number is today, whether the bulls come in, whether the bears come in. I would even watch for that possibility of a pretty substantial point whipsaw today, depending on how the market emotion plays this out. So be very, very careful here this morning and plan your risk carefully. And once again, just a reminder, if those bears attack, we could see some big point moves to the downside all at once as everyone runs for the door to protect their profits if the bears have reason to engage. So have an awesome day. I wish you great success in your trading, and we'll see you right back here bright and early Wednesday morning. Wish you all the very, very best.